Good morning, it's Monday the 22nd of November and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So stay tuned. So let's take a look at the economic numbers being issued this week. And starting today, we'll hear the latest Eurozone consumer confidence figures, the US existing home sales numbers and Australia retail sales update. Tuesday's a big day for the Manufacturing and Services Purchasing Managers Index, where we'll hear the latest figures in the Eurozone, the UK and the US. And we'll take a look at the UK situation in more detail in a moment. It's a busy day on Wednesday. We'll hear the latest interest rate decision from New Zealand. And we'll get a leading indicator of how things are going in Germany when the IFO Institute released their latest index expectations. And we'll talk more about that shortly. We'll also get to hear the second estimates of the Q3 GDP figures, as well as the latest personal consumption expenditure figures over in the US. And we'll discuss both of these in more detail in a moment. Also on Wednesday, we'll hear the latest US durable goods, the Michigan consumer confidence, US jobless claims, and the EIA crude oil stockpiles, and finally, the release of the latest minutes from the Fed. Thursday's a holiday in the US for Thanksgiving, so it'll be a quiet business day over the Atlantic. On this side of the water, we'll hear the latest German GfK consumer confidence numbers and the latest GDP figures in Germany. Friday brings us the Australian retail sales numbers. And the companies that we'll hear updates from this week are as follows. On Monday, we'll hear from the Big Yellow Group and Diploma. And as people return to the office, how has the video conferencing company Zoom fared? Well, we'll find out on Monday as they release their Q3 earnings, something we'll take a look at in more detail in a moment. On Tuesday, the multinational contract food service company Compass Group report their full-year earnings, and we'll take a look at these shortly. We'll also hear from AO World, Cranswick, CRH, Pets at Home, Severn Trent, over in the US, Best Buy and Dell. On Wednesday, specialty chemicals and sustainable technologies company Johnson Matthey report their last 6 months' earnings, and in the context of a falling share price, we'll give our thoughts on that in a moment. We'll also hear from Britvic and United Utilities. And finally, on Thursday, we'll hear from Hill & Smith. Inflation remains a key theme heading into the new week after US CPI came in over 6% and UK inflation over 4%. The Reserve Bank of New Zealand will be in focus as they decide how to deal with the ever higher transitory inflation. Meanwhile, as virus cases are on the rise in Europe, Austria is back under lockdown and cases in Germany have reached a record high. Will Germany impose lockdown restrictions next? This week, President Biden is expected to announce the new Fed chairman. Will it be Jerome Powell, or will the more dovish Lael Brainerd take the helm? And finally, with a Thanksgiving holiday, this is a holiday short week in the US, so things could be a little quieter than usual. So let's take a look at some of this week's key stories in more detail. On Monday, the video communication specialist Zoom is due to report third quarter earnings as the share prices heads lower. There is waning enthusiasm towards the stock as more people return to the office. However, Zoom could still surprise with its growth and profit. Expectations are for earnings per share of $1.09, a 10% increase from the same period last year. Revenue is expected at $1.02 billion, which would represent growth of over 30% across the year. And this would mark the second straight quarter where revenues have topped $1 billion. The outlook will be particularly in focus. And back in August, executives warned over challenges as people return to normal mobility patterns. Heading into the report, forecast target sales are over $4 billion, around 51% growth for the full year. Compass is due to report full-year numbers on Tuesday. Now, the company was hit hard in lockdown and the recovery has been far from easy. Food inflation and staff shortages are strong headwinds for the firm. On a brighter note, margins have picked up over the past year thanks to focused cost-cutting. Now, Compass Group is aiming for margins of 7%, and whilst this isn't going to happen from one day to another, the group is certainly on the right path. This full year, Compass is aiming for 4.4% underlying operating margins. The other point of interest will of course be debt. The last we heard, net debt was triple cash profits, well above the target 1 to 1.5 times. The group has indicated that Q4 revenue was around 86% of 2019 levels, marginally ahead of guidance. Tuesday also brings us the UK's latest PMI figures for the manufacturing and services sectors. Now, both sectors saw activity rise in October. Manufacturing picked up to 57.8 in October, up from 57.1 in September, its first rise in 5 months, as supply chain disruptions hurt the sector. However, there is little evidence that the supply chain disruptions are indeed over, so manufacturing activity is likely to remain volatile, particularly for the UK automobile industry amidst a shortage of chips. Meanwhile, UK services rose to 59.1 in October, up from 55.4 in September, despite inflation rising to an almost decade high. So as a result, keep an eye on the pound and of course the FTSE. After peaking over the summer, the German IFO Business Sentiment Index has been steadily falling, dropping to a 5-month low in October. Supply chain disruptions have been the biggest drag on sentiment in recent months amidst supply chain bottlenecks and chip shortages. However, the economic slowdown in China and political uncertainty in Germany after the elections have added to that overall uncertainty. As the winter months approach, virus cases are once again on the rise, and they reached 65,000 new daily infections, a record high. Speculation is rising that lockdown restrictions could be imposed again in the coming weeks, particularly amongst the unvaccinated. And this could drag on business sentiment going forwards. Wednesday also brings us the second estimate of the third quarter GDP figures over in the US. The first estimate came in at a disappointing 2% annual rate, short of forecasts of 2.6%. And it was also well short of GDP growth in Q1 and Q2, which was 6.3 and 6.7% respectively. An increase in virus cases and supply chain disruptions, in addition to deteriorating consumer confidence, were all to blame for the economic slowdown. With inflation at a 30-year high, higher prices and lower consumer confidence hurt economic growth. It is worth noting that this is the second reading, which is often less market moving than the first. But in any case, do keep an eye on the US dollar and US indices. The PCE deflator, or personal consumption expenditure deflator, is the Fed's preferred measure for inflation. And we'll hear an update on this on Wednesday. Now, so far CPI and PPI have continued rising. Yet the Fed has stuck to its belief that high inflation is transitory. However, the more dovish voices at the Fed could soon be drowned out if the PCE increases in October. In September, PCE came in at a 3-decade high of 4.4%. Meanwhile, the core PCE reading was still elevated at 3.6%, with 4% coming into the picture, a level last seen in 1990. Now, this data is due shortly before the minutes of the latest FOMC, and will keep questions over the timing of the Fed's next move firmly under the spotlight. So yes, the latest FOMC minutes are due to be released on Wednesday, and of course relating to the November meeting when the Fed announced that it will start tapering its $120 billion monthly bond purchases by $15 billion. In the press conference, Fed Powell pushed back on hiking interest rates, sticking with the well-rehearsed verse that the current high inflation levels were transitory. Yes, that word again. The minutes could shed more light on just how transitory the Fed considers inflation to be. Fed speakers are starting to sound more hawkish. And let's not forget that the Fed meeting was before the October CPI release, which saw inflation jump over 6%. And this does mean that to a degree, the minutes are already just a little out of date. And finally on Wednesday, we hear the first 6 months figures from the British-based multinational Johnson Matthey. Now, earlier in the month, the company issued a profit warning and announced plans to sell off its battery materials business amid challenges generating strong returns. This decision surprised investors and the share price tanked 16% across the week. And the share price continued falling across last week. However, this was much more controlled at 1.7%, so these half-year figures are unlikely to provide much more clarity, as half-year results are set to be in line with market expectations and full-year results towards the lower end of market expectations due to US labour shortages impacting the business. Consensus estimates for full-year underlying profits are at £581 million, within the company's guided range of 550 to 636 million. So that's all the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from Vodafone, Imperial Brands and the property companies Land Securities and British Land. In the FTSE 250, Tate & Lyle, Electro Components, 3i Infrastructure, CMC Markets, Biffa, Games Workshop Group, Diversified Energy Company, Kainos Group and BlackRock World Mining Trust. So that's what's to keep an eye out for this week. Don't forget to click on that subscribe button just to make sure you don't miss out on our regular market updates and of course our special market analysis videos as soon as they're released. And of course, if you're interested in the markets, don't forget to check out our app, which you can download from the App Store to your mobile phone, which will give you a whole host of very useful functionality as an investor. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.